Dinar shift, the world of finance rarely presents a moment where a single, focused policy shift can potentially redefine the standing of a national currency, yet that is precisely the scenario unfolding in the Middle East. Consider a powerful announcement emanating from the Central Bank of Iraq, an institution whose decisions ripple across the globe to anyone holding the Iraqi dinar. We are now heading into 2025, a year that is beginning to look like a pivotal period for the currency's trajectory, driven not by fleeting rumors or wishful thinking, but by a substantial, official monetary framework that has just been unveiled. The long-anticipated signs of a potential strengthening of the dinar are now manifesting through concrete, structural reforms that represent the most significant movement in years. However, in an online environment saturated with speculation, it is crucial to filter out the noise and focus exclusively on the verified details of the new policy, understanding how it is poised to impact Iraq's entire banking infrastructure and the overall stability of its currency market. Today, our focus is an in-depth dissection of this new monetary policy. We will break down every critical component, explaining not just what the Central Bank of Iraq, CBI, is implementing, but why these changes are fundamentally necessary and the detailed mechanics of how they are designed to influence the value of the Iraqi Dinar IQD. For individuals who have been monitoring the IQD's progress or holding the currency, this information is vital for a realistic assessment of the future. It moves the discussion from the realm of speculative conjecture to the factual bedrock of financial governance. The CBI's framework for 2025 is being recognized by financial experts as a potential inflection point, marking a deliberate move toward a stronger, more resilient currency. This comprehensive strategy targets key vulnerabilities, aiming to foster greater stability, drastically reduce erratic market swings, and strategically boost the intrinsic demand for the national currency within the formal banking sector. For years, a significant segment of the community interested in the dinar has maintained high expectations for a rapid, dramatic revaluation. While the dream of an immediate, overnight transformation is often out of sync with complex economic realities, the current, measured steps being taken by the CBI are demonstrably more substantive and far-reaching than any previous efforts. This new policy architecture methodically addresses several long-standing systemic challenges. It introduces significant adjustments to the mandatory reserve requirements for commercial banks, institutes explicit limitations on the historically high volume foreign exchange auctions, and mandates far more stringent reporting and oversight for large-scale financial transactions. These technical adjustments, while seemingly bureaucratic, are the actual levers of change that will directly manipulate currency demand, manage supply dynamics, and solidify overall market confidence, potentially paving the way for a gradual but steady strengthening of the IQD against major international currencies like the US dollar. The first and most powerful mechanism within the new policy centers on the reserve requirements that commercial financial institutions in Iraq must now adhere to. The new regulatory blueprint mandates that banks must maintain a larger proportion of their required reserves in Iraqi dinars. This represents a fundamental shift away from the previous, more flexible system that allowed banks to more easily utilize foreign currencies, such as the US dollar, to satisfy these reserve requirements. The economic impact of this single requirement is direct and immediate. It artificially and structurally increases the institutional demand for the IQD. When banks are legally compelled to hold a greater volume of dinars in reserve, they must actively source and purchase that currency from the open market. This, in turn, exerts a sustained, upward pressure on the currency's value, functioning as a textbook example of the fundamental economic principle of supply and demand. The previous regulatory environment inadvertently placed a ceiling on the organic market demand for the dinar, as banks faced less direct pressure to hold the national currency. By shifting this balance, the central bank is actively steering the entire banking ecosystem toward a preference for the national currency. This policy initiative is not merely a technical adjustment, it's a strategic long-term measure designed to cement internal market stability and significantly bolster domestic and international investor confidence in the Iraqi dinar. It signals a clear commitment from the monetary authorities to prioritize and support the value of their own currency over the ease of foreign exchange accumulation, creating a structural tailwind for the IQD's standing in the market. This systemic preference for the dinar within the core banking system is a foundational element for any subsequent currency appreciation. The second major pillar of the 2025 framework introduces critical reforms to the country's foreign exchange auction system. This mechanism has historically been the CBI's primary tool for managing and controlling the dinar's official exchange rate, but it also became a conduit for massive volumes of US dollars to enter the market at the official rate, often leading to an oversupply that diluted the dinar's relative strength. Under the new regulations, the era of essentially unrestricted access to foreign currency for institutional buyers has ended. The new policy imposes strict daily limits on the amount of foreign currency that individual banks are permitted to purchase through these auctions. Crucially, these new limits are not arbitrary. They are now calibrated and tied directly to each institution's established transaction history and the documented needs of their actual customer base. This stringent limitation directly addresses the historical problem of excessive dollar supply flooding the market through official channels. By significantly throttling the flow of US dollars, the new policy is designed to reduce the foreign currency's availability, thereby raising the relative value of the Iraqi dinar over an extended period. The principle here is clear. The more controlled and restricted the supply of the US dollar becomes within the official system, the stronger the Iraqi dinar is theoretically positioned to become in a comparative sense. This policy is a move toward a more market-driven valuation rather than one heavily subsidized by continuous dollar injections, reflecting a mature and sophisticated approach to currency management. Furthermore, the 2025 policy introduces a significant upgrade in transparency and oversight via stricter reporting protocols for banks involved in large-scale currency movements. The new requirements mandate that any single transaction exceeding the amount of 50 million Iraqi dinars must now be accompanied by comprehensive documentation and receive explicit approval from the relevant regulatory authorities. While the primary overarching objective of this heightened scrutiny is the crucial mission of combating money laundering, deterring illicit financial activity, and enhancing the overall financial transparency of the system, it also grants the central bank a much tighter and more granular level of control over the significant currency flows that possess the power to destabilize the market. This proactive monitoring is a powerful tool. By carefully tracking and sanctioning these major transactions, the CBI is positioning itself to effectively prevent sudden, large-scale, and unregulated shifts in the demand for either the dinar or foreign currencies. This strategic hands-on approach is engineered to cultivate a more predictable, less volatile, and altogether safer currency market. For those holding the dinar, this rigorous regulatory posture should be interpreted as a strong, positive confirmation that the central bank is deeply committed to the long-term protection and valorization of the national currency, providing a layer of institutional stability that was previously less pronounced. This increased control should reassure both domestic and international investors about the reliability of the Iraqi financial system. It is important to address the significant speculation circulating in some online communities suggesting that this new policy framework could immediately trigger a massive overnight revaluation event. This perspective, while fueled by hope, is ultimately unrealistic and not aligned with the stated objectives of the monetary authority. The central bank's core mandate, as consistently articulated, is the establishment and maintenance of currency stability, not the pursuit of rapid, unpredictable, and potentially destabilizing value surges. Uncontrolled sharp fluctuations, whether up or down, can inflict substantial damage on a fragile economy and fundamentally erode investor confidence. The realistic expectation is that this policy will instigate a gradual, sustained appreciation in the dinar's value over a significant span of time. This gradual strengthening will be organically supported by the creation of steady, structural demand and the purposeful restriction of the foreign currency supply within official channels. In the immediate term, the practical effect of these combined policies is likely to be a noticeable reduction in the daily volatility of the dinar, resulting in a tighter, more managed trading range. For long-term holders, this stabilization is a clear and positive signal. The currency is steadily evolving into a more reliable and potentially more attractive asset for future capital investment. However, maintaining a clear-eyed view of the economic realities is essential. Overly optimistic expectations, not grounded in official policy statements, and macroeconomic data should be tempered. The context for this new policy is absolutely critical for an accurate evaluation of its potential impact. Iraq's economic engine remains overwhelmingly reliant on its vast oil revenues, which historically account for over 90% of the government's total budget. This deep-seated dependence means that any significant, sustained appreciation of the dinar's value will inevitably remain partially tethered to the prevailing global oil market trends. Even the most meticulously crafted and expertly executed domestic monetary policies cannot entirely insulate the currency from the powerful fluctuations in global crude oil prices. These external market forces, which operate entirely outside the direct control of the central bank, will continue to exert a substantial influence on the ultimate value of the IQD. While the measures introduced by the CBI represent a highly positive and necessary stride toward establishing currency stability, they fundamentally constitute just one piece of a much larger, complex economic puzzle. Anyone assessing the potential for gains from the dinar must maintain a holistic view, incorporating a careful consideration of global commodity markets, the progress of domestic structural reforms, and the fluid nature of regional security dynamics alongside the internal policy changes. A review of the dinar's historical performance offers a crucial, long-term perspective on the CBI's operational philosophy. Following the year 2003, the Iraqi dinar traded at a rate of approximately 4,000 IQD to $1. Over the subsequent 2 decades, the central bank implemented a series of calculated monetary reforms that gradually solidified the currency's position. By 2020, the dinar had achieved a sustained stabilization around the rate of 1,450 per US dollar. These historical efforts vividly demonstrate a consistent pattern of steady, cautious, and deliberate improvement, rather than a strategy based on sudden, dramatic, or high-risk changes. The newly announced 2025 policy framework is a direct continuation of this proven, measured approach. Its core purpose is to systematically reinforce stability and to progressively strengthen the dinar's standing against other major foreign currencies. This preference for incremental, low-risk progress over speculative maneuvers underscores the CBI's commitment to avoiding any action that could potentially destabilize the broader national economy. In practical terms, the immediate day-to-day effects of these policy adjustments are unlikely to be acutely felt by individual, ordinary currency holders. The significant mechanics of change are being implemented and played out entirely at the institutional and commercial banking levels. This means that retail investors will primarily observe the consequences through market-driven, fluctuating exchange rates rather than via a direct, instantaneous policy benefit. This reality powerfully emphasizes the paramount importance of patience and the necessity of closely monitoring only official, verified updates from the central bank. It is absolutely crucial for those holding dinars to resist the temptation to make impulse investment decisions based on the ceaseless flow of unverified online speculation. Instead, a more mature and realistic understanding of the IQD's potential value in the months and years ahead will be derived from a careful focus on verified policy changes and broader, measurable economic indicators. The central bank's renewed and stated focus on governance, transparency, and control serves a dual purpose, one of which is to significantly bolster confidence among the international investment community. By strictly requiring commercial banks to submit highly detailed reports on all large-scale transactions, the CBI is clearly signaling that the Iraqi financial system is fundamentally serious about upgrading and modernizing its financial governance standards. This crucial step could substantially encourage foreign investors, who typically demand low regulatory risk, to perceive the Iraqi market as a more reliable destination, one that is less susceptible to sudden and chaotic currency shocks. While the initial, primary audience for these new regulations is the domestic banking sector, the powerful secondary effect is a marked increase in Iraq's overall credibility on the global financial stage. for anyone diligently tracking the dinar's performance. This embrace of transparency is an undeniably positive development, one that is designed to contribute to a gradual, yet steady, long-term appreciation of the currency's worth. One pervasive and deeply rooted misconception that frequently surfaces in online forums is the notion that the new CBI policy acts as a guarantee for an immediate return to the much higher, pre-2003 dinar values. These claims lack any foundation in the official policy framework itself or in any public statement issued by the central bank's leadership. While the totality of the new measures is explicitly designed to eventually lead to a more robust dinar, the expectation of overnight miracles is fundamentally detached from the realities of modern, complex currency management. Currency strengthening is inherently a protracted, multi-stage process, and the CBI has consistently communicated its preference for measured, sustainable steps that prioritize economic health over dramatic, short-term, speculative gains. A critical task for anyone involved with or monitoring the Iraqi dinar is to clearly distinguish the difference between hopeful speculation and the reality dictated by policy and economic fundamentals. An additional layer of analysis must consider how this new monetary policy fits into the mosaic of Iraq's overarching economic reform agenda. The nation has been actively collaborating with key international financial institutions in a concerted effort to systematically modernize its entire banking sector, implement much-needed fiscal spending controls, and aggressively diversify its revenue streams beyond the volatile reliance on oil. The new monetary policy is perfectly aligned with these broader, comprehensive objectives, strongly suggesting a unified, coordinated approach to achieving long-term economic stability rather than a series of isolated currency interventions. This synergistic, coordinated strategy significantly raises the probability that the policy will indeed produce positive, long-lasting results for the dinar, even if the immediate financial gains are initially limited and modest. Furthermore, it powerfully illustrates Iraq's dedicated commitment to simultaneously strengthening both its domestic financial infrastructure and its credibility within the competitive international markets. The most pragmatic and realistic expectation for investors to hold is one of gradual stabilization, followed by a potential for sustained, long-term appreciation. The central bank's new measures are specifically designed to engineer market conditions that favor increased institutional demand and reduced overall volatility, both of which are fundamentally beneficial for the dinar's value. In the short term, the market may exhibit tighter trading ranges and a slightly firmer exchange rate. However, the medium-term effects are anticipated to include a gradual, more pronounced increase in value as commercial banks fully adjust to the new reserve requirements and the market structurally responds to the deliberately restricted flow of the US dollar supply. While this entire process will decidedly not deliver the dramatic, sudden changes many speculators hope for, it is an undeniable indication that Iraq is seriously committed to professional currency management and the crucial protection of investor confidence. The factor of political stability will inevitably play a crucial role in determining the ultimate efficacy of this ambitious new policy. Consistent and confident cooperation between the federal government in Baghdad and the various regional authorities is absolutely essential to maintain the necessary high level of confidence in the national economy. Any emergence of significant political disputes or a period of prolonged instability could severely undermine the policy's intended positive impact. Similarly, any renewed regional security concerns or escalating geopolitical tensions have the potential to negatively influence investor sentiment and, consequently, affect the currency's performance. These major external factors are just as relevant and influential as the domestic policy measures when attempting to accurately assess the full potential for the IQD to strengthen. Investors must remain keenly aware of these persistent external dynamics and calibrate their expectations accordingly. Global economic conditions will also continue to exert a powerful influence on the dinar's overall performance. Fluctuations in the price of oil, sweeping international trade trends, and significant movements in global financial markets can all individually and collectively affect the institutional demand for foreign currency and, by extension, the dinar. Even with the rigorous new CBI policies firmly in place, The Iraqi dinar's valuation remains closely and inextricably tied to these broad, external economic variables. This fundamental reality underscores the essential understanding that currency appreciation is a complex outcome shaped by both well-executed domestic policy measures and the prevailing realities of the global economy. For anyone holding the IQD, the practice of monitoring international financial trends alongside domestic policies provides the only complete and accurate picture of potential future outcomes. Crucially, the new policy framework clearly prioritizes sustainability and long-term structural health over short-term, high-risk speculation. By implementing strict limitations on daily foreign currency purchases, increasing mandatory reserve requirements for banks, and establishing intensive monitoring for large transactions, the central bank is purposefully focusing on the enduring health of the market. While this calculated, measured approach may not generate the excitement for investors who are chasing rapid, high-magnitude gains, it significantly mitigates risk and actively lays a solid foundation for a stable, gradual appreciation over an extended period. Those who are currently holding the dinar should view this development as a clear signal of positive, structural economic change within Iraq, rather than a simple, immediate profit opportunity. Patience, coupled with the adoption of realistic expectations, will prove to be the most critical elements for anyone invested in or holding the national currency. It is absolutely paramount to note that while speculative information and unsubstantiated rumors can propagate with incredible speed across online platforms, the only true, accurate insight into genuine currency trends comes from official updates and verified reports. The Central Bank of Iraq consistently issues regular public statements and detailed policy updates, which should serve as the primary and most reliable source of information for anyone professionally monitoring the IQD. Adhering strictly to credible, fact-based information sources ensures that all decisions regarding the currency are grounded in verified data, not in hearsay or exaggeration. This discipline is particularly important given the inherently complex and often volatile nature of currency markets, where even minor misunderstandings can quickly lead to significant, unplanned financial consequences. The commitment to official information is the bedrock of a sound investment perspective. In summary, the newly unveiled 2025 CBI policy framework represents a significant and positive structural leap toward the long-term strengthening and stabilization of the Iraqi dinar. The policy measures, which include the strategic increase of bank reserve requirements, the capping of foreign exchange purchases, and the enforcement of enhanced reporting for all large transactions, are all meticulously engineered to foster a currency market that is significantly more stable, more predictable, and less prone to major shock. While the concept of a sudden, overnight revaluation remains highly unlikely, the realistic and achievable outcomes for dinar holders include gradual value appreciation and a substantial reduction in market volatility. This decisive policy is a powerful and reassuring signal, demonstrating Iraq's serious commitment to upgrading its currency management practices while strategically aligning itself with broader, international standard economic reforms. The most important takeaway for all involved is the absolute necessity of patience and an unwavering reliance on official updates, rather than falling prey to exaggerated claims or pervasive online speculation. For anyone actively tracking or investing in the Iraqi dinar, it is essential to understand that true currency strength is never determined by mere hope or the latest online hype. It is instead the direct result of robust policy, the immutable forces of the market, and sound economic fundamentals. The Central Bank of Iraq is taking concrete, professional steps to structurally improve both the stability and the institutional demand for the IQD, which is set to slowly but steadily enhance its value over time. Investors are strongly advised to continue to closely observe exchange rate trends, vigilantly monitor official announcements, and stay comprehensively informed about Iraq's larger, continuing economic reforms. This measured fact-based approach remains the most reliable path to understanding the potential long-term gains from holding Iraqi dinars.